So this topic now, we're going to talk about self-employed income. Now, self-employed income usually gets a bad rap because people usually think self-employed comes with a lot of risk. Depending on how you want to put that together and mitigate it with the bank, self-employed can be just as same amount of risk or even less risky compared to what you're doing. So let's say now you work for a certain job, you feel like you have a certain skill set, and you want to take your skills and become self-employed. You want to, and usually most cases, most scenarios, if somebody wants to become self-employed, the reason is because they want to actually earn more in what they're currently doing. So now let's say you are brand new self-employed. So does the bank look at it very negatively? Does that mean that you cannot get an approval for a mortgage if you apply for it? Not necessarily. So once again, let's say you worked in the industry for a number of years, you built some experience, you've got some certain skill sets that you've kind of honed in by working in a certain industry, and now you want to become self-employed in that industry, and you might only be self-employed for a couple of months. Most lenders will actually take a look at the last 2 years, or you can ask your lender to take on the last 2 years and to see what the average is and use previous history. Once again, the banks, as long as they can see somewhat of a history being projected, somewhat of a history in place, that kind of helps them decide to say, well, listen, we're thinking this individual might make the same amount of money or more, so he's self-employed. So you kind of offset some risk that way. Let's say you're self-employed and you're working in a brand new industry. What do you do in that situation? Sometimes if you're working for an employer, you might go on something that we call a contract. So you might have a contractual period with them and you might be self-employed. So sometimes we can actually take a look at the contract. The contract will state this individual is making certain X amount of dollars per month, certain X amount of dollars per hour. This is what he's guaranteed. So in a way, it takes less of that risk away. So a contract in place kind of helps you as well and helps the lender decide, well, listen, he is self-employed, but we do have some sort of an idea of what the guaranteed income might be coming in. Now, let's say you've been self-employed for a number of years, so 2 or 3 years. What do we do in that scenario? In that scenario, we're going to look at a 2-year average, once again, because self-employed is something the banks are not guaranteed. It can fluctuate, right? So self-employed income usually is fluctuating. So for fluctuating income, they want to take a 2-year average to see what it is. Most lenders now will let you either gross up that 2-year average, depending on what the lender is and what their policies are. But the usual case is they want to take a 2-year average. Now, this is where the tough part comes in. So most self-employed people actually have a lot of write-offs, right? So one of the benefits of being self-employed. So in the last couple of years, you've gone a little bit more aggressive with your write-offs. Is that going to come and affect your mortgage approval? It could. But there's ways that a good lender or a good broker can actually look at your financial paperwork to see, well, you have taken some more aggressive write-offs, but let's try to find out what those write-offs were. So something they might ask for a little bit extra paperwork, something like your tax returns, and they can see something called gross income versus net income. Now there is a line on your tax return that kind of breaks down the income. They can say that your gross income for that year was X amount, and then with your write-offs, it became your net income. Now they can actually go to the lender and talk about that and say, listen, our client has made gross income and has been consistent for the last 2 years. And there's been maybe a couple $1,000s, $20,000, $30,000 in write-offs, and the net income is here, but the gross income is something that we want to use. Now, some lenders and some insurance companies have something called a stated income program, specifically built for self-employed people. Now, to qualify for that program, you need to be self-employed for a minimum 2 to 3 years. Minimum down payment requirement starts off at a minimum of 10%. You pay a little bit of a higher insurance premium because once again, the lender and the insurance companies are taking a little bit more risk, but these are programs available. So stated income program, once again, great way to use. Now you've been self-employed for a couple of years. You have your tax returns. You can prove to the bank give them somewhat of an idea what your income level has been by providing either your gross income with your tax returns, 2 years business financials, kind of looking at what your company has earned, and maybe you have decided to leave more money in your company and not take such a big salary or taking more money out of your company. So they could take a look at your business financials to take a look at to see roughly where your net income has been, what the retained earnings in your company kind of have. So that could be a different way of looking into it. Another really easy way to look into it is just looking into your 12 months or 6 months bank account history to see what kind of deposits are coming regularly into your business bank account. That is a really easy way to take a look at it. So if you can build a history there, self-employed income is not that bad. It is considered to be a little bit more riskier than the other four sources of income that we talked about previously. But if your broker is well versed in self-employed, or your lender has some really good policies for self-employed, it shouldn't be that much more difficult. So definitely, if you're self-employed, don't lose hope. There's always hope available as long as we can form some sort of an understanding, some kind of credibility in your income levels.